Welcome back. You're with us on Closing Bell, and it's time to move on. Introduce our next guest on the show. Aman Chowhan, fund manager at Abakkus Asset Management, is with us. Aman, always a pleasure to have you on the show. And we're speaking to you at a pretty interesting juncture where the market rally has paused after the fierce run that we've seen. And I think the biggest debate that at least I'm hearing around me now is whether the sectors that have already run up, capital goods, PSUs, railways, this entire capex/government theme, whether it's time to lighten positions here or whether this is a multi-year cycle that has just started now. Where do you stand in this debate?
Both sides. It all depends what your holding period is. So if you have bought them for a trade, makes sense to lighten them up, book profits. If you have a 2 to 3 year investment horizon, I think there's still some steam left. Provided we have a stable government next year, which we all are hoping for.
Let me ask you, when it comes to your portfolios, I'm not sure of the exact exposure that you may have. Actually, tell us, I mean, at an aggregate level across different funds, what would the exposure be to, say, PSUs overall? And would you look to lighten?
Exposure to PSUs on the lower side. So our biggest exposure would be the PSU banks. We have the largest PSU bank in our portfolio. Beyond that, very little of exposure. We don't have defense in our portfolio. Some of the private defense name, but not the PSU defense name. So as far as PSU is concerned, not much. It will be, say, single digit across portfolio, across AMC.
Aman, hi. Actually, just sticking with the public sector as a pack, not just banks, but PSU and the rally that we've seen there. Is that the one area which, I mean, if the market has to do something about elections, pre-elections, right? Nobody's expecting, upset or anything. People are very confident that there will be continuity. But if the market has to show its nervousness or whatever, will we see that in the PSU space? That let's एक बार को profit book करते हैं फिर देखते हैं. I mean, that kind of an attitude. Or you think it's unlikely?
I think we'll see that in the PSU space and also in the PSU banking space, because banking is the most liquid sector. That is where the FI ownership is maximum, and that's the maximum liquid where the liquidity is. So if somebody has to short, somebody has to book profit, somebody has to move money in and out, then that's where the focus would be there. So yeah, definitely, I think PSU would be impacted.
All right. Hi, Aman. Good afternoon, and thanks so much for joining in. I'm looking at your portfolio. I'm not sure whether you'll have HDFC Bank, but you'll have other private banks. I think the private bank, I think you'll have ICICI Bank, IndusInd Bank as well, and I think SBI, if I'm not mistaken. What's your view on this large bank? It's dragging the index. It's a big underperformer. Is it coming to those levels that you'd have to give it a closer look?
Yeah, the first name you mentioned, we don't own it. We never owned it in the last 4 years of our history, but it's getting interesting. Consensus numbers is close to 100 rupees EPS in 25 at 14 times. Forget price to book. Even on a PE basis, the stock is now looking attractive, and that's definitely now in our radar. So we are not yet acted upon it. Beyond that, the call for large private banks is simple, that if the GDP and the economy has to grow, it can't grow without the banking sector participating, and you have to stick with these names. In the stock market, in the near term, they may or may not perform, but as an entity, as a company, or as a bank, they will continue to grow if India has to grow. And that's where the optimism is. It's a decent credit cycle. We're not seeing spikes in NPAs. So that's where the comfort and the optimism stands for the private banks, or even for the large PSU bank that we own.
Okay, so you see comfort with the large PSUs as well as large private banks. Got that. Aman, stay on. We want to talk to you about consumer and what to expect in the months going forward as we're entering festive season. Before that, let's listen in from...
So that's ITC. Aman, by the way, any thoughts on ITC? You heard that chat with the CEO?
Interesting. We don't own it, but definitely it's on our radar to consider at a future time. But as of now, we don't own it.
All right, got it. Just a quick word, Aman, on I think you still own names like Iron Exchange in your portfolio?
Yeah.
Yeah. Okay, without going into the specifics of that company, are there other ways to play this, the water theme? I mean, water purification. Water is generally a theme. Many are focused on the government initiative. But are there other ways? I mean, I've heard some mentioning pump makers. If the piped water has to be kind of supplied across, the piping is done, the water is yet to come through. I mean, I've heard pump makers as one beneficiary. Again, stocks have done well in quite a few instances. But if you've looked at this sector in some detail, any thoughts?
Yeah, so it's not a very, the macro demand is good, but it's not something which has very great companies. So you can play it rightly via the pumps. You can do it via the pipe makers. So we have JSAW, HSAW pipe makers which are listed. We can do it through EPC contractors, people who take irrigation orders, people who take water treatment orders. So that EPC companies is another way to look at this. It's like ion exchange or like engineering companies tend to do this. There are not many. So there are like 2-3 companies which are listed. So ion is one of them. So these are the 4-5 segments via which we can play the water theme.
Got that. Aman, if I remember correctly, you had Sarda Energy in the portfolio as well. I'm not sure if it's still there as of the latest monthly exposure, fact sheet and exposures. But if you do still own it, what's the thought process now when you're looking at materials or metals? I mean, a stock like Coal India has rallied like one would have never anticipated because of what's happening in the power space. So your thoughts on power/materials, going into metals?
So we are very selective. So within metal, all of the companies that we own would have some event or some trigger or some specific reason why we would have bought it. In Sarda case, it is the opening of the mines, which will help them in the cost benefit. The stainless company that we have just merged group entities. Now it has become the largest stainless steel company. So there's some reasoning behind each and everything. It's not a broad macro call that we are very positive on steel or very negative on steel, but we have a neutral to positive view on steel. But within that, these companies that we have in the portfolio would have some reasoning behind it, where it could be some earnings growth trigger or something happening. So in the company that you mentioned, it's the mining company, which is going to help them improve margins, improve profitability. It's still one of the cheapest metal stocks, and decent management, decent company, decent outlook. So that's the broad rationale.
Yeah, the one-year chart is telling us the picture of Jindal Stainless as well as Sarda Energy. Pretty good going out there. Obviously, Aman cannot name any of these stocks, but these were part of the portfolio, as we are aware. Aman, final question from my end before I let you go. Mid-cap IT, I think, that was something that you preferred in comparison to large-cap IT. You still hold on to that, or do you believe some of these larger IT companies are looking a little bit more interesting? And I ask you this because we're getting into a Q2 results. Commentary isn't going to be great. Some of these stocks have run up big time. But how would you view them from here on? Would you add or would you lighten now?
We don't have much of exposure to the mid-cap IT. So we would have some exposure to the large cap and some exposure to the small cap IT. So mid-cap is something that is not in the portfolio. The typical is Mindtree, LTI, Coforge. So these are not part of the portfolios. The reason being the risk reward is not favorable as per our viewing in this segment, because while they're growing faster than the large cap, but the valuation captures that. So if Infi is trading at 20 times and if somebody else is trading at 30, 35 times, I don't think that is justified. Yeah, you're going faster, but then not that 30-40% premium that you trade over Infi. So we find value in the large cap IT. We find that's the reason we have some exposure there. The small cap IT is a decent mix. It has good growth as well as valuations are not as rich as what the mid cap IT is. And that's the reason we have that in the portfolio. So that's the combination in the IT that we have. Overall, yeah, for the next quarter or 2 quarters, not much is going to change. But then from then on, people will start looking at 25, and IT is more of a sequential game. So once things settle down in next 1-2 years, 1-2 quarters, once sequential growth rate picks up, the sector can get re-rated. That's what the broad view on IT is. And we are going to grow. I don't think globally anybody has a doubt that Indian IT companies will not continue to gain market share. So even if global IT spends were to be flattish, Indian companies will still grow at a single digit because they'll continue to take on market shares from the global players.
Okay, all right. So you're clarifying on that front, then you like the larger cap and the smaller cap, mid cap, not much exposure in terms of IT. And I'll have to do some more research to get a couple of names from the small cap IT space, but that for later this evening for me. Thanks so much, Aman, for joining in and giving us your take on the markets and a whole host of sectors as well that we discussed.